Hey everyone, welcome back to Drawbridge Finance. Today I'm asking the question, how long does it take investing $10 a day to build $1 million portfolio? As always, welcome back. My name's Levi Woods. This is Drawbridge Finance. This is an opinion channel about money, and I am not offering financial advice, but I'm going to get right into this today because I wanted to do some math, as I like to do. And one of the things I was thinking about was, if I invest $10 a day, how long does it take to actually build $1 million portfolio? Now, of course, I'm going to cut right to the chase today, and I'm going to let you know that it takes exactly 43 years. That's 516 months to take $10 a day and turn it into $1 million. Now, how do I know this? Because I've studied the charts, I've looked at the data, and I know that investment returns on average over the past over 100 years return around a 7.8% return. So it's relatively easy for us to get a 7% return after we pay off our fees and everything. And I wanted to take this data and do a backtest today because that's what I like to do. I like to actually substantiate the data that I present to you guys, the viewers. So let's take a look at a chart that I built and we'll see if these numbers work out. Okay, so the details on this are really straightforward. Investing $10 a day for 25 years in the SPY. Now, of course, I've looked at all the details on this particular thing. I'm going to backtest over the last 25 years to the beginning of the SPY, which is the exchange traded fund that tracks the S&P 500. So back on January 1st, 1993, when this fund started, we're at $43.97 is what the purchase price per share would have been. Now, if we invested $10 a day, we would basically get $920 invested, and we would purchase approximately 20.92336 units. Now, each of those units would pay $0.213. Of course, I would have reinvested that dividend, and that dividend payout from these 20 units would have actually given me an extra 0.1 of a unit. So at the end of the 3 months, I would have a total number of units of 21 units. The value on that, 21 times 43.97, would give approximately $924. Now, of course, when I'm running a scenario like this, I have to figure out the fees. Now, on this particular one, SPY, it charges an MER of 0.09%. So I'm going to calculate that into this chart, and I'm going to subtract that number of units based on that value. So 0.09% is very low, and that is very important, as you will see later in this video. So the 0.09% works out to 21 cents on the value of $924. In the next quarter, the number of units being repurchased is going to be less that 21 cents. I'm going to calculate this fee in. So in the second quarter of 1993, the price was slightly higher, $45.25. These are historical prices that I've downloaded off the internet of the SPY. I'm investing $900 in the second quarter because there's not as many days in the first quarter. The units that I purchased, 19 units. The dividend, 0.318. The dividend reinvested gives me 0.28 units. So now my total units are the 21 units that I had before from the first quarter, plus the new 19 that I've purchased, plus the 0.28 that I've been given, minus the 0.21 cents that were taken off. Now, all we have to do is scroll down to the bottom of this. We're just going to continue that along, $10 a day, and we're going to see how much does it work out to. The total I've invested is $95,880 because there's been 9,588 days that have lapsed since I started the investment. Of course, this is all theoretical, but I'm just going through to see if these numbers actually work. The portfolio value at the end of this is worth $335,478. And the amount quarterly that I'm getting charged is around $75 at this 0.09% fee. The total fee is $2,500 from a $95,000 investment and is now worth $335,000. The return on investment is 249%. So I'm going to do some really quick math to just see what does that work out to? Like, what's the return on investment? I've got a present value of $0. My payment was $304. My future value is now $335,478. I'm trying to figure out what my annual percentage rate of return is. So I have an annual rate of return of 8.33%. That's how easy it is. There's the proof in the pudding. Now, let's do another test. Let's just check something else because, everybody always says, well, there's no way to get a 7% return. And this is like the simplest way to invest in 500 companies and make a 7% return. But we're going to go a little bit further with that. So I'm going to do one more little calculation, and that's going to be the return on investment calculation. So we know that originally back in January 1st of 1993, the fund was at $43.97. Now, today, January 1st of 2019, it's worth $269.93. So over 26 years, the compound annual return on investment is 7.23%. Again, so even if we bought on the very first day, we still can prove that this makes over a 7% return, and how easy it is to get this. Now, one of the things that is absolutely imperative to this strategy is the fact that we're paying such a ridiculously low management expense ratio, which is MER. And people ask me all the time about, like, I'm a beginning investor, what kind of things should I look out for? Especially when you're starting out and you're looking for new investments, you have to ask the question, what is this investment going to cost me? Because everybody's management expense ratio is different. Now, I'm going to show you just really quickly by using the same chart, what would happen if the MER was higher? There's companies out there like Wealthsimple in Canada, which has a great program and makes it really easy for investors, and they charge 0.5%. So if we just change this to 0.5%, you can see that we had 21 cents we were paying before, and now it's $1.16 on this same fund. Of course, this is theoretical, but we're using historical data from this particular exchange traded fund. So let's go down to the bottom and see. At the end, 26 years into the 43-year investment strategy, you're actually paying $391 per quarter, which means that 0.5% fee is actually eating up 13.9% of your total original invested money. The $95,000 that you put in, 13,000 of it has gone to fees. It drops your return on investment down substantially, 2.26. It's still above 7%. You're still doing fine, but it's something to watch out for. Now, banks, like if we look at an RBC mutual fund, a lot of them charge a fee like 1.44%. So if we change it to 1.44% and then we scroll down, from your $95,000 investment, $34,000 has gone to fees. 36% of your original money. That 1.44% works out to 36% over a long period of time. And it's how the banks make money. So, I mean, it's really why mutual funds are archaic, poor choices. I'm going to just go out and say that a mutual fund is, generally speaking, a fairly poor investment choice. And it's specifically because of this management expense ratio. So looking at other options like exchange traded funds or ETFs, where they have management expense ratios that are 0.09%, we can get back down from our $95,000 investment, only $2,500 is going to fees, or 2.6% total. And that makes a huge difference. These are the things that I like to look out for. I always ask on every single investment, how much is it going to cost me? So originally the point of this video was to talk about how long it's going to take to make $1 million in my portfolio. And really, that was the easy portion. I mean, we know that it's going to take 43 years, but this MER is really the takeaway. That's the most important thing that I look at when I look at a chart, because really it just shocks me. I do this math all the time. I look at this stuff and I'm like, I can't believe the banks are charging us the way that they are. And yeah, it makes me a little bit sick, to be honest, to just look at this stuff, because there's smarter investments out there. Anyways, if you guys are loving my content, please remember to hit that like button down below. Click the subscribe button if you don't already subscribe. If you're interested in following all of my trades on Patreon, you can check out my Patreon channel. I'll put a link right up here. And everybody, let's just get rich together. See you very soon.